Here I come. Right, we're here. Hello, everybody. Good afternoon to you, and welcome to our nice bit of music there. Mortgage Livestream. Paul Archer's Mortgage Livestream. Hope everybody's well. Hope you're well. Hope you're enjoying life, the universe, and everything right now because things are good. It's August. It's summer. It's not particularly warm in this country, but it never really is. People are moaning about the summer, but it's the same summer we've had for 20, 30 years. It doesn't actually change, does it? People moan about the British weather, but it's never been nice anyway, never will be. Enough of that. Let's talk more about mortgages and the mortgage broker world and the house buying world and all those good things. Got a few little ideas for you to help you in your business, particularly on the protection side, because the examination people have really boosted the protection side of things recently. So I want to give you a couple of little clips on that as well, just to update you really. But I had an interesting email from a couple of boot campers or potential boot campers. You know, our boot camp is the innovative and once and only way of learning CMAT through lots of interactive videos and audios and all that kind of stuff. Really up to date and lots of live stuff as well. Really, really powerful and good price too. We keep the cost down because we don't have the overheads big companies do. You know, we don't have like big offices and stuff like that. You don't need that these days. Hello, it's called the technology internet. And people are based around the world and all that kind of stuff. Anyway, this boot camper wrote in and she was asking about backgrounds for mortgage advisors because her background is she's in the NHS, and you know, hats off to her for what she's been doing the last couple of years, defo. But point is though, she's more interested in how would she be right to be a mortgage advisor, and I pinged back an email and I said, yeah, there's no reason why not, because you've got to remember that mortgage advisors or mortgage brokers, call yourself what you like, you are still a people person. You've got to learn a lot of stuff. You've got to learn a lot of technical knowledge, and you've got to be mathematical and inclined to use software. You've got to have an attention to detail. You've got to be able to follow the rules and be compliant. And there's many industries that do that. I mean, the NHS, they follow a lot of rules. They're as regulated as we are. So there's no issue there. Attention to detail, of course, you can't not have that if you're working for the NHS. But more than that, you've got to be able to deal with people. That's the key thing. You've got to be able to handle people, talk to people, build rapport with people, ask people good questions, listen to people, get people on your side, get people to trust you. By the way you operate, have good morals and ethics and all those good things. Because the future of mortgage advising, as a few brokers are going to get bigger, I talked about that last week, you're going to have the big players again in a few years' time. And they'll be very corporate again, and they'll follow strict rules and regulations and processes, and it'll be very corporatized, and price will come down. But for brokers who want to remain independent on their own, or small businesses, your niche is being able to talk to people, relate to people, influence people, get on with people. Being on video, crikey, there's no reason why you can't do that on video, and you should too, because it's very, very good for your time management. But face-to-face is fine as well, because the apps in the future will talk to people via technology and phones and stuff. And you've got to be good communicators. So people skills, influencing skills, attention to detail, following the rules, build rapport, build trust, all these things are transferable. And if you think your occupation is a bit like odd to what a mortgage advisor is, don't think that at all. People want to deal with people that have life experience as well, that can relate to them. People want to deal with people who can understand their issues and problems and concerns. If you're in the later life marketplace, that's a really, really important need, isn't it? So hopefully that's encouraged a few more of you to come on board. So let's move on from there then and get on to my first serious topic. Well, that was a serious topic, wasn't it? That was very serious. But I want to get into a couple of pieces from the protection side of things for you. We'll do a couple of these before we sign off this afternoon. I hope you're all right, by the way. We're on Facebook now, and we're on LinkedIn, and we're on YouTube. Been on YouTube 2 years. Like YouTube, does a really good job. Facebook, see how that works out for us. And LinkedIn, well, see if anyone wants to watch it on LinkedIn. Not quite sure if they will or not. It's probably not their bag because it's more B2B, isn't it, LinkedIn? But and you may well be a consumer who wants to look at mortgage advice or be a mortgage advisor. Hopefully you're a mortgage broker, mortgage advisor who's updating their knowledge as well. And you can talk to me or listen to me every week forever if you like, because I'll always be here in our little studio here. Anyway, enough of that. Let's get into protection. So what I want to talk about is protection aspects. I want to talk about financial impact now. So I'm going to put a little title up for you because we like our little titles, don't we? So this one is the financial impact financial, there you go, impact, there you go, for your clients in the event of death or illness. And that's where we go with mortgage protection, don't we? Death and illness, long-term illness, critical illness, death. That tends to be the two needs that we focus on, because those two things can stop you from owning your house. And, you know, a lot of brokers, advisors tell people what the financial impact is, and that's great. A lot of insurance companies produce lovely little glossies and Facebook ads, and they're all great as well. And you can watch videos on YouTube called The Widow's Story, and it tells you. But of course, as I've always talked about, your clients got to understand themselves, they've got to appreciate the impact. And you've got to ask good questions to get them to, you know, reveal the impact. And the whole point is that the impact of death and illness can be alleviated by money. That's the whole point. So if somebody dies or they come to ill and there's an impact on them, that you can't change the impact of their life. Of course you can't, unless you're able to have a godlike situation where you bring people back from the life and death, but you can't do that. No, we provide money to alleviate the hardship. Now, my dad, my mum died back in 1995. It was terrible, awful situation. She was very young, and she died of cancer. And my dad was left on his own. Now, we'd all left the nest then, so we weren't financially dependent. But the point was that my mum died, and she had some really good benefits from work. She worked for the Halifax Building Society at the time. And she had death in service. She had a widow's pension on death. She had loads of illness stuff as well. And she was off ill for about a year, and she was fully paid. But on death, my dad got a lump sum of money from the Halifax. He got a widow's pension, which he still receives now, and that's what, 26, 27 years later. Now, did it help him? He was still distraught, of course he was, crikey. But it meant he didn't have to go to work. He didn't have to sort of rush out to work, and he was able to live off the pension. The lump sum paid off the mortgage they had, so the house was mortgage free. He was able to cope, you know, with whatever he was going through at the time. He got the state pension when he reached 65. And he's still got my mum's pension, which is index linked as well. So he's been looked after financially, and that's the point. That's what you do. You provide money to help people in those situations. So what are the issues then for people then? What do we need to be comfortable with? Because, you know, you get questions on these in the exams as well, don't you? So what are people's needs then? You know, let's just put that up there for you in a big circle. Well, first of all, of course, as you can appreciate, you've got a debt. So the person has a debt. Their need is to have the debt repaid in the event of death or illness. That's what we're talking about. And we're mostly talking there about the mortgage that you've just created. That creates debt, and on death or serious illness, you get the mortgage completely repaid, and that alleviates that problem. People don't have to pay the mortgage. It's a huge amount of money per month for most people. Now, also in the event of death, you've got to think about the home itself as well. So not only is there a debt there, you've also got a home, and I'm putting in there home ownership. A lot of people forget this piece. That's a bit obvious, isn't it? This piece, because if you have a jointly owned property, which is joint tenancy, obviously if one person dies, the other person owns the whole thing. That's great. Get the mortgage paid off, and they can live in that house. They own the whole thing. It's all this. So take Shelley, for example. My wife, if I died, we get the mortgage paid off, so that's all gone, and we're joint tenancy, so that she owns the whole house. It's all hers. She doesn't have to worry about anything. But if we own the house as tenants in common, which a lot of joint borrowers do, because, you know, they're not married or whatever, then on the death of one person, the other person doesn't own the whole house. They only own their half. The death of one person, their ownership of the house goes into their estate and probably gets inherited by their next of kin, which may well be their mum and dad. Now, that's fine and dandy, I get all that, but the person who lives in the house now only owns half the house. Yes, the mortgage is repaid because you've done that, but they only own half the house, which means, as you can appreciate, that the deceased mum and dad could move in and be joint owners, and that's not good. So what you need to do, therefore, is to provide additional life assurance to pay off whoever inherits the house, or get them to write a will and sort it out properly. This is why financial planning is more than just a fixed rate mortgage. You know, it's a lot more complicated than that. So that's fine. Well, it's not fine, but it's fine as we can do. The other need that people have is to change their life. So people will have, obviously they're not dead now, so it's a long-term illness. So they have a need to change their life because their long-term illness has caused them to need to adapt their life. They might need a new car where they, as a disabled person, they can drive the car. They might need the home revamped to open up the doors to allow a wheelchair to go in, maybe have a ramp at the front, maybe a lift takes them upstairs, or at least the cost to be able to move house, one or the other. People's lives need changing when they have serious illnesses, and that's why extra money is required for that. So critical illness can pay off the mortgage, of course it can, could certainly allow you to change your life and maybe pay off the other person. It's hard, critical illness, because it's not the cheapest policy in the world. But don't just think mortgage. Think beyond that as well. Other needs that people might have. Well, they might want to have some medical treatment. There you go. So if somebody has a critical illness, and they've got a mortgage paid off, etc., they might want some private medical treatment because they don't have private medical insurance. The NHS may not be appropriate, or the waiting list, or whatever it is. They're not going to go there on the political side, but the pure fact is the client might want to be able to buy some treatment, which might cost quite a few £1,000s, and critical illness can provide that as well. Other needs. Well, you might have funeral costs as a need as well. Not so much for a younger person, but everyone has to pay for a funeral, and life assurance can pay funeral costs. We tend not to talk about that with mortgages, do we? That tends to be, the June Whitfield advertising on the TV in the afternoon for that one. IHT is another one as well. Again, it's older customers. Generally tends to be IFAs, sort of what call really. A mortgage broker wouldn't tend to get involved in that area. But somebody might have a large inheritance tax bill, and therefore life assurance can help to fund that inheritance tax bill, be it a pet or be it a long-term bill. So these are the kind of needs that people have in the event of death or illness. Our job, therefore, is to talk about these, get the customer to realize it themselves. Don't tell them, coach them, ask some questions. What would happen if you died? How would you be able to pay your mortgage? Well, I don't know, that'd be terrible, wouldn't it? Okay, now half your house is owned as tenants in common. So if your parents inherited the house, how would you feel about that? Would you want something to be able to change that? In the event of a long-term illness, how would you feel about being able to change your house? You've got to ask some questions to get them to think this stuff through, because we obviously know this. But these are the needs that people have. And don't forget, your job is more than just fixing up a fixed rate mortgage. You do need to protect your clients. It's absolutely vital to do that. Hope it's been useful. Bye. There you go. Do you like that one, did you? Nice, wasn't that? So nice little, well, wasn't a good topic, let's be honest about that. Nobody wants to talk about death, do you? It's not very pleasant at all in the sort of scheme of things. But as a mortgage advisor, you have to talk about these things. You do. It's your job. You have to be able to talk about these things. Make sure you've got a good rapport though with your clients before you start the topic. Don't ever get into the topic without having a rapport with your clients, because that would just be devastating if you didn't know that. All right, let's give you one more topic then before we wrap up today. One more topic I want to share with you. Again, it's talking about protection now, and it's looking at the new syllabus for you as well. And we often talk about financial priorities or lifestyles. So this one's about protection priorities for different clients. So I'll put a little title up for you. We're talking about protection here again, and we're talking about priorities. There you go, protection priorities. Because as we've seen for different clients, people have a need for protection. We just talked about that. And they have a need for protection in a number of places. We talked about that as well. So they have, for example, they have the need to replace an income. Okay, so replace an income. People have that need, don't they? And replace an income in the event of illness. So that's the income protection insurance. People have a need for a lump sum on death, to pay off the mortgage, to pay off the next of kin, and to provide income to replace salaries as well. People have a need for capital in the event of a long-term illness. So not only do they have an income in case of illness, they have a need for capital if they're ill as well. They have a lump sum in the event of death, which we talked about as well. They have a need to repay a mortgage as well. Put a mortgage in there. And if you think about it, people have a need for IHT as well. So they're sort of needs that we've talked about on a few occasions already. So if I just put a line along there, and these people have these needs. Now, what we need to be comfortable with, though, is what types of people have these needs. It's all a bit stereotypical, really. We're talking here about stereotypes of customers. And the book has a very stereotype list of typical people. It's a bit old-fashioned, really. I think the world's changed. People are very different, aren't they? So they have the young person left college, they have the new family, etc., etc. And I'll put those down for you because we need to be aware of what they are, but we need to also be aware that people are very different nowadays. So what have we got along here then? Well, we've got the typical single person then, the single person straight out of uni or college or whatever, they're at work, they're single, and you as a mortgage broker might be talking to them about a mortgage possibly. Then you have the couple, the young couple, effectively, two people getting together to buy a property. Maybe you'll be talking to them at some point as well. Then you have the young family. Let's put that in there for you. The young family, who are typically a couple, and the couple has young children. It's a very typical generalization, isn't it? Then they like to call it, well, I call it the empty nester. There we go, the empty nester. This is the older couple whose kids have disappeared, bounced away. And then you have the retired dudes who have retired, they've stopped working, and they're enjoying their life. Now that's quite an old-fashioned way of looking at things, let's be honest about it, really, because you can have all sorts of people having different needs. A lot of empty nesters now. This is couples in their 40s and 50s still have kids living at home. We're having a dinner party in a couple of weeks' time, and we've got some friends coming around same age as us, and their two kids still live at home. Hello, what's that all about? They're not empty nesters. They're not far off retirement, actually, these two, and their two kids are living there because they're very comfortable. And actually, truth be told, the parents actually love them being there, and why not? Who doesn't want their children living with them a long way? So these are a bit stereotypical, really. But the point is, though, that we need to be aware of typically what needs do people have. So I'm going to get my little red pen now, so we can take a look at this graph here. Don't you just about make this out, really? You've got different needs for different people, haven't you? So if somebody is single and they're coming to talk to you, they have a need to replace their income in the event of illness. They do, don't they? Do they have a lump sum need in the event of death? Well, not really, but they do need to have the mortgage covered. Even if they're single, they need to have the mortgage repaid on death, because the mortgage itself may well be inherited by their next of kin along with the property, and the mortgage debt will still need to be serviced even if the person's died. A lot of people don't remember that. Single people, of course, generally have mum and dad as next of kin. The mortgage goes into their estate, so does the house, and the house might take a while to sell to pay off the mortgage, and mum and dad are going to be lumbered with a mortgage to pay for a while. They may feel obliged to do so. For a couple of quid a month, you'll have that mortgage paid off. A lot of single people don't appreciate that. But they don't have a need to have a lump sum in the event of death just to replace income, because they're gone, aren't they? Do they have a need for critical illness to repay the mortgage? Well, they certainly do. But do they have a need for additional money to pay for adapting house and stuff like that? Arguably, they should as well. Do they have an IHT need? Well, they do, but they're not going to think about it at such a young age. You probably haven't got much of an estate, have they? A young couple coming through to you as well. The young couple would certainly have a need to pay off the mortgage because that's what you're arranging for them. Would they have the need to replace their income on death? Possibly. Possibly. It depends how much they rely on each other's incomes. So they might have a need for that. One might be dependent on the other. But arguably, if the mortgage is repaid, the other one could probably afford the bills. Replacing income illness, yes, they do. Everybody has that need, whatever their age. Unless, of course, they have massive payments from their work. If they're ill for a long period of time, they'll need to have their income replaced. So young people certainly need that. It's quite cheap at that age as well. A young family has similar needs. Of course, they have a need to repay their mortgage. Of course they do. Do they have a need to replace income in the event of illness? Yes, they do as well. But now they need a lump sum as well to start providing for income to replace the lost salary. because they got kids now, of course, and the idea with kids is they rely on both salaries to bring up the family. If one salary goes through death, then the other one's going to suffer. Even if the mortgage is repaid, they're going to struggle. So they need some more to cover off the income that's been lost. They definitely have a need for that one. Do they have a capital need in the event of illness? Then arguably they should as well. I think these people do as well. But again, can they afford it? That's the issue there, isn't it? Because at the end of the day, it comes down to affordability now. Are they going to be able to afford everything, or should they look at the priorities? Because we'll have a quick look at priorities in a second. Empty nesters still have a need for private insurance. They also have a private medical insurance need, possibly comes in now. That's what we think about being fixed up privately in the event of illness as well. They still have a mortgage need. Of course, they've still got a mortgage, probably not much to go, typically. Do they have a critical illness? Yes, they do as well. They're also starting to think about inheritance tax as well at that age. So that's certainly a need. Do they have a need for a lump sum in the event of death? Well, the kids have gone now, so probably not, but you need to look at the situation, don't you? The last one, they're retired, which you can't quite see there on the live stream, but the retired people don't really have an awful lot of these needs now because they've got a state pension or private pension or company pension, which doesn't stop really. Well, it stops in the event of death, but it doesn't stop in the event of illness, so they won't need that. Will they need a lump sum in the event of death? Probably not. Critical illness? Well, yeah, they could do with that, but it's going to be extremely expensive, and their pensions will be paid anyway. The mortgage is gone anyway. They probably have an inheritance tax need. So you can see how people's needs change as they get older and their situation changes. That's really the key to that particular example that I've given you there. But something to be aware of as well, and I'll squeeze this one over here, is Pepsi. I've talked about Pepsi before. This is the priorities that people have when it comes to financial guidance. We've talked about this many times before. And the priorities are protection in the event of death comes first. So death to repay a mortgage, death to replace an income comes first. Then it's earnings protection in the event of illness. So that comes second, and critical illness arguably comes in there as well. Then it's pension provision. Then it's building up your savings. And then it's investment advice, getting a better return on your investment. That's the priority that we often use for people. So that's just stereotypical people's lives, really. Hope that's cleared up a few issues with you. Hope that's been useful. Bye. There we go. I hope that has been useful for you as well. All good in the protection syllabus. CMAP 2 is massively boosted on protection. You've really got to get quite detailed on that. And you should too. It's your job. You need to. Even if you did the old CMAP 2, you need to be doing this as part of your CPD. Or at least doing the special protection exam anyway to give you some qualifications. Anyway, enough of that. I think we'll wrap up now. It's come up to 20 past. You need to keep these to about 15, 20 minutes really to keep your attention. I'm Paul Archer, as you know, so you can contact me at LinkedIn if you want to. That's paularcher.uk, goes to my LinkedIn profile. So I'd love to hear from you. Just tell me who you are and we can link in. We've got a Facebook page now, it's a business page now, so you can head over there and find that and find out a bit more about us if you want to. We appear every week, so come on down and subscribe to the channels, etc., and we'll keep in touch and help you. Bootcamp starting last week, in fact, so when I'm starting in September, but the bootcamp's always available to anybody that wants to come along and learn their CMAP, and we'll look after you. Enough of that. Hope you enjoy the rest of your week. Get some sunshine if it ever decides to shine, and see you next week. Bye. Oh, gotta go down now. See you later. Bye.